Okay, so it's 10 a.m. in Australia. Hello, everybody. Welcome to today's session. So good morning if you are in Australia, or good evening, depending where we are in the world. We actually have participants from 15 different countries around the world, ranging from Australia, Europe, Middle East, Africa, Latin America, and North America. So yeah, was amazing, the attendance for our webinar. So thanks everyone for taking the time to be here with us today. So my name is Marco Costa. I will be the host of this event. I'm the managing director of Aquila Australia and co-founder and partner of Aquila Group. Aquila is a global management consulting firm created 9 years ago. And over all these years, we have already supported around 1,200 projects, improvement projects in 20 different countries. Today we will talk about embedding a culture of cost management. Of course, it's a current and a very trendy topic, especially in this challenging year we are all facing with this pandemic. As we know, in most business, cost management is a scary subject and usually avoided from most people, from most superintendents, managers, and so on. But the idea of today's event is really to reflect, like, how can we create an environment where managing costs really become just the way we do business? So something that everybody can talk and without this scary factor that I don't want to talk about it. So to discuss this topic today, we invited 3 finance executives from the mining and metals industry. Stacy Sliman is the Chief Financial Officer of and Company Secretary at Tomago Aluminium. She has over 19 years experience, and over the last decade, Stacy has held both financial and operational improvement roles in the mining and metal sector. Tomago is the largest aluminium smelter in Australia and has been operating 24/7 since it started in 1983. So welcome to the webinar, Stacy.
Thanks, Marco. I'd just like to thank you for having me today. Tomago's had a long relationship with Aquila and embedding our continuous improvement framework. And also just to give some context before we get into talking about cost at Tomago, Marco's right, largest smelter in Australia, Asia Pacific, with revenues in excess of $2.5 billion and a cost base of $1 billion. So also at the very bottom of the current aluminium LME cycle, so cost management is our #1 focus for Tomago, and which is what we're here to talk about today.
That's great, thank you. Robert Knott is the finance manager at Nistar Hobart. He spent the last 11 years in several roles in the zinc manufacturing industry. Nistar is a global multi-metals business with a market-leading position in zinc and lead, and growing positions in other base and precious materials, precious metals. Sorry. So welcome to the webinar, Rob.
Thanks, Marco. Thanks for inviting me to participate. It's always good when people are willing to listen to you to talk about costs, so that's fantastic. As you said, Nistar is a global company, so we've got businesses in Australia, in the US and in Europe. Our cost base is really big, so cost is always a major focus for the company, always looking to see how we can achieve and beat budget all the time. And we've had a really good relationship with Aquila, dating back from, I think, when you first integrated into Australia. So thanks for inviting me.
Yeah, I have a very special feeling for Nistar and Hobart. Actually, my son was born over there. I have a Tasmanian son because of you guys, because of Nistar. So, and then the third one, Leandro de Oliveira, is the Vice President, Finance and Business Support, Brazil at AngloGold Ashanti. Over the last 15 years, he has held corporate and operational roles in finance, strategy, business planning, business improvement, procurement, HR, IT, and other support functions. AngloGold Ashanti is the 3rd largest gold mining company in the world. So welcome, Leandro.
Well, thank you, Marco, and thank you, Aquila, for the opportunity to share and learn with my two colleagues, whom I just met on the virtual backstage a couple of minutes ago. AGA Brazil is a leading gold producer in the country, and we have continuously operated for 186 years, and we currently operate 3 different sites here, mostly underground. So produce just north of 500,000 ounces per year, and been sharing the top spot in the country with Kinross for the last couple of decades. At current gold price levels, despite the drop that it had today, we are a business of approximately $1 billion of annual revenue. And although cash generation is always key in all industries, we're going to talk about a little bit about cost management, and all-in sustaining cost, which is a standard from the World Gold Council for the gold industry, is a very important benchmark metric to compare assets, and is a very important part of our market guidances every year. So I'm happy to be here and have a good chat and good interactions, and hopefully everyone who joined from all this place around the world will stay to the end and find it interesting.
Yeah, I hope so. So yeah, thank you, Leandro. Yeah, I know it's 8 p.m. in Brazil, so thanks for making yourself available at this time to be part of this webinar. And of course, thanks Rob and Stacey as well. It's 10 a.m. It's in the middle of your working time, so thanks for being available to be here with us. So for everyone watching, please feel free to send questions to our guests. You can use the Q&A button located at the bottom here somewhere of your screen. There is a little icon Q&A. So our plan is to spend about 10 minutes in each topic and answer the questions online if you have time. Otherwise, if you don't have enough time, we will answer them by email after the event. So we'll try to make our best. It will be a 1-hour event, but then we will try to answer the questions during this time. A recorded version of this webinar will be available at Aquila's YouTube channel, and also at LinkedIn, in our LinkedIn pages from Aquila Australia and Aquila Brazil. Please feel free to share it with anyone. Also, we'll be giving away at the end of just after the webinar, 2 books about PDCA. This one here. So it's written by Aquila's director, Raimundo Godoy, and Aquila's partner, Claudia Bessas. So it's a very practical and interesting book to support your organization to achieve excellence. So just after the webinar, we will draw 2 names among all the participants that attended the whole session. So coming to your comments, Leandro, everyone that attended the whole sessions, we'll go to we will draw 2 names to send the book. All right, so today we'll focus on 4 topics related to cost management. That's what we are seeing now on the screen. So first one is the framework for cost management, then team engagement, follow-up routines, and embedding the process. So those are the main, of course, they are all correlated. It's impossible to talk about team engagement without talking about framework or follow-up routines and so on. It's all correlated, but the idea is to group some questions in each one of these main topics. All right, so let's start. First one, framework for, so before I start, each one of the topics, I will maybe direct the question to one of you 3. And then, of course, so we just give the words to the others as well. So let's do it like this. So for the first one, framework for cost management, maybe we will start with you, Stacey. So in your opinion, what's the ideal cost management framework to be established in an organization? So talking about framework for managing costs, what, in your opinion, the ideal framework that should be established?
Sure. So for me personally, and then here at Tomigo, there's a number of, I would say there's three key pillars or attributes that really come together to form a cost management framework. And the first one of those are the key processes that underpin the framework. And for us, that's our budgeting and forecasting process. So it's what we do, and it underpins the whole framework. But to support that, you also need integration. So the budgeting and forecasting process is one pillar. That process needs to be integrated across the whole business, across every department. They have to be integrated and work together. We can't have departments working in silos from finance. We can't have finance being the owners of the framework and managing the whole process. And then the third part of the framework, in my opinion, and what we think here at Tomigo, are the routines and the culture. And by routine, I mean the routines that support the process and support the integration. So if I can just step through what we do here for each of those pillars, just to give a feel. So when I'm talking about process, I'm talking about our annual budgeting process, number one, supported by our monthly forecasting process, number two. And those two processes work together. And for us, it's a constant iteration on how those processes work. And so this year, for example, we've been working with the continuous improvement team and the finance team together to take our budget to the next level, where we're really focused on this budgeting process, getting accountability and ownership away from the top level and all the way down to crew level, and making sure that we build our plan from the bottom up rather than from the top down, so that we're managing the process at every level of the business. And that's where the integration comes in, where we move away from finance owning the budgeting and forecasting process, but being more of a facilitator, playing the support role, being there for everything the department needs, but the department owning their cost base, knowing how it's built up on a line-by-line basis, so that and when we move into the routine of managing that and the cost control process, they know from the beginning how it was built up, and then they know how to formulate a plan to bridge the gap. So for us, once we've gone through that process, our integration process is the fact that finance supports all of the departments. The departments are responsible for reporting on costs, and they're responsible by following follow-up routines that are really daily, weekly, monthly, moving from crew level, looking at costs that they can control, moving through a daily site meeting where management is aware of where we're sitting, where our variance is, and how we're going to bridge that. There must always be a plan. We don't accept a variance. The variance, there has to be a plan to bridge the gap, through to the monthly routine of departments reporting to the management team, and the monthly routine of the management team reporting through to the board, which for us is a board of global companies, so Rio Tinto, CSR, and Hydro North. So the integration and then the systems and process is really the support to make sure that framework is in place. And for us, I did miss what is I would say, the fourth part of the framework, which is getting that improvement process in with the budgeting and forecasting process as well. And it's just the way we work. It's not a separate process. It's not finance. The cost management framework is part of our overall operating system at every level of the business, I suppose.
Okay, that's great. Yeah, so it's really part of the, it's not a different framework from a continuous improvement. It's really part of the continuous improvement framework. So how to make the budget for next year, as this year, for example, you did zero-based budgeting for most of your costs. So it's really how to integrate this kind of improvement into the routine, into the framework for costs. So.
That's right. And like an example of what we did this year is through that budget building process, going through zero-based budgeting, where we're identifying the gaps and particularly the large value gaps to where we would like to be, is identifying then the continuous improvement project that needs to be in place to achieve the budget we're going to set. So the processes are integrated. So by the time we've finished our budget process, we have our value pipeline, we have our continuous improvement projects, and we're all heading in the same place, which is essentially to achieve the plan that we're setting ourselves, and getting away from the silo of having a budget, having a continuous improvement plan, and just hoping that the two will align. And so I'm really pleased with how we integrated this year and last year as well, but we're really trying to just make it part of the one process.
Okay,
and
great.
a follow-up routine. You know, not a separate event. It's just part of the same cost management.
Yeah, it's part of the holistic cost management framework. Yeah. Okay, great. Rob, do you want to add anything about the framework? Thinking about your experience? Sorry, you are on mute.
Is that better?
Better, yeah.
Yep, okay. Yeah, no, I think you've got an absolute valid point there that the continuous improvement objectives need to line in with the cost management strategy as well. The two work in hand. And also we need to make sure that all the business goals and strategies are included within that cost framework. I guess by doing that and making sure that people throughout the business are involved in developing the plans, there'll certainly be a lot more ownership and accountability throughout the year as people really own that plan and see it more as the business plan rather than just, it's a finance budget or finance are responsible for that. So I certainly align with what Stacey is saying there.
Okay, that's great. How about you, Leandro, your experience in AngloGold?
Well, we're not supposed to repeat ourselves, but I did like what Stacey said about integration. And I think it's key because AGA is historically recognized for its technical excellence in all its jurisdictions. So what we believe here is that a successful cost management program requires very close integration with the technical support teams. So that's one thing. And maybe the other thing I would like to add is that OE800 is our global business improvement program or brand. And it comes straight from the core of our strategy. And the OE is for operational excellence. The 800 is a reference to the strategy or the target to have a portfolio of $800 per ounce average all-in sustaining costs on the long term. And like I said, it comes straight from the core of our strategy into everyone's routines as we develop improvement projects or even in the daily work that we do at all sites.
Okay, good. So yeah, I think that you three mentioned, of course, about how to integrate people, how to get people on board, and how to have it's not something for finance, it's something that the people will be engaged, not just in the budgeting process, but also in the follow-up later, of course. So then we come to the second topic that is really about people. So team engagement, again, that's all interrelated, they are all correlated to the same thing, but so maybe for this one, Leandro, I will direct the first the question to you. So regarding team engagement, what's the importance of the involvement of all levels of organization? We know that managers and so on, that's natural for them to be accountable and manage and responsible for the cost centers and so on. But what's the importance of involvement of all levels in cost management? Well,
I'll start with a disclaimer here, Marco, if you don't mind. So I do have a finance background, but before becoming the VP Finance, I was a VP of HR for the region. And I continue to accumulate that role today. Probably not for very long anymore. And so I'll start my comments with financial answer, and then I have an HR touch at the end, if you don't mind.
Okay.
So obviously, cost management is different at each level of the organization. And at the more operational level, and including the first line of management, most of it will be about disciplining the execution, adherence to the standard practice, doing it correctly the first time. So, and then cost reports will probably be more simple, will be in local currency, they will be attached to execution metrics, will be pretty much about, cost management will be pretty much about avoiding the waste of resources or avoiding rework. That's key for cost management at this level. Then you start to, here is where you start to see input also from other support disciplines. So HR and training, procurement in establishing partnerships, contracts with OEMs in terms of consumption, performance, reliability of equipment to make sure that we deliver what we planned for. As you go higher in the organization, then more senior managers will have a portfolio of activities. They'll probably constantly need to evaluate and decide on trade-offs. Budgets don't always accommodate everything one wants to do. So there's a lot of prioritization. Understanding of the business requirement is fundamental to take, obviously, the right decisions. Then you have a GM or VP level, and it becomes more about the results of the entity, or in my case, the region here, or Brazil in AGA. And then we start looking at more like consolidated metrics. And as I mentioned a couple of times now, our all-in sustaining costs, which includes cash costs, continuous investment, everything that you need to do to sustain the business. And as I mentioned again before, it is a significant portion of the company's market guidance, measured in dollars per ounce. So for this two latest group that I mentioned, and then the reports will start changing. Like we'll use the reporting currency, in this case, US dollars for AGA, and more strategic business performance and planning is made on specific costs. Right? And obviously, these aren't rules, and they are not unbreakable rules, and there are some overlapping here. Like I look at local currency reports myself, especially in a year like this one in Brazil, where our currency devaluated significantly against the dollar. So looking at the US dollar numbers could lead to misleading analysis. But in summary, what probably summarizes everything I said is that every layer of the organization, in fact, every employee has a contribution to the cost management in different ways. And that's why it's important that everyone understand what they need to do to have their input in the final result.
And what do you do in order to have, especially the operation side and supervisors and so on? What do you do in order to have these guys on board, in order to show the importance of managing costs? Of course, in a different way to talk about it, but how do you make them engaged in the process?
Here comes the HR touch.
Yeah. So, okay. Yeah.
In my opinion, in order to have all those areas on board, like again from the top to the bottom, the example must come from the top. Company culture comes from the leadership. All employees' behavior is directly influenced by the behavior of the company's leaders. So I hope that we are all working for companies in which we believe in the values, and we actually have leadership that we trust and that has a strategy to take the business forward and sustain it. I certainly do, right? For those 15 years that I worked for AGA, since joining it as an intern, and through different leadership teams, I always had those two key things. So this is really important to drive everyone's behavior. And so if the leader is focused about cost management, then you understand this is an important part of the business and probably replicate that behavior. And another very important aspect, at least in the Brazilian context, in our culture, is the alignment of the variable remuneration, right? Everyone must understand, and we must translate like very broad strategic targets into something that's tangible, so that we have each employee know what she has to do to deliver the expected results. And they will obviously be remunerated for that, and creating the right environment to achieve all this excellence that we want to achieve.
Okay, that's great. How about you, Stacey, at Tomago? How do you see this part of team engagement?
Yeah, so I mean, I would say I do, again, agree with Leandro. And for us, we've found with engaging the team in the past that it's really important for, if we think about it operator level, for them to understand why. What is in their control and why should they control it? And so we've really been working on, I guess, explaining to them the dollar impact at this level of what they're doing down at their level. And a really simple example, I would say, is anode covering, right? It's part of an operator's job. The anodes may not be covered correctly, but the ultimate impact on the business is that we use more electricity, and we use in excess of $500 million worth of electricity a year. So it's really explaining that if you do this part really well, the impact is really material. So you really do have a part to play, and giving them the information, visible dashboards, giving them the tools. And another example I would have, again, this is just the why and the mindset, is this year we're kicking off a specific productivity project that's going to run for a long time. It's going to run for 12 to 18 months. It's productivity at all levels, ultimately cost management. And we're kicking that off with our leadership team by actually using an organisational psychologist so that everybody gets in the right mindset to be questioned, to be challenged, to openly welcome what is really an uncomfortable challenge sometimes in your particular area, because the ultimate goal is just productivity for our business and to meet our strategic objectives. So for me, I've seen in getting people engaged, it's really explaining the why we would ask them to do something differently, and that it's okay to be challenged and to accept that someone may have a different view of how you do things that could be better. So yeah, that's my view, and certainly what we've been trying to work on here at Tomago to get some improvement and improved results.
Okay, great. Yeah, I think you touched a very interesting point about understanding the why, because each employee will think the why a bit different. So in your case at Tomago, for example, when you go to operators and supervisors, instead of, as you mentioned, instead of bringing just dollars and costs and so on, it's much better to bring a number of units of, for example, number of gloves per day they are using, or number of how many kilos of reagents they are using in this pot, or and so on. So when you talk about their day-by-day language, not just dollars and values, it's much easier to get their buy-in. So they will say, okay, yeah, I'm spending 10 a week. I would try to target to spend 9 or 8 and so on. So it's it's their day-by-day language. So that's really good. How about you, Rob? How about Nistar? How is the team engagement over there? It's on mute again. Sorry.
All right, is that better? Yeah.
Yeah.
I think it automatically mutes on me. Yeah, the context is a massive piece. So there's always a reason why we focus on cost. People will have their own opinions, but it's really good to set that up front to what the reason is. So it might be, hey, due to the COVID impact, or the LME price, or the business isn't profitable at the moment. There's a whole range of different reasons. And it's really good to set that up front so everyone's clear what the purpose is. The other one that I find has been really valuable is to really include the end user of the cost. So while we certainly need to have the leaders and the middle managers on board and driving the process, if we want to get full engagement right across the whole business, we need to make sure we include everyone in the business in the cost management. And I guess what we see is that all levels throughout the business, people have different roles, different skills, different experiences. If we can get, I guess, a lot of that information together, we end up with more information and we make better decisions. And the people right at the end consumer, they'll see and think about things differently to what everyone else will. That they'll be able to provide, I guess, opportunities that we might not see by doing data mining or looking at reports and the likes. So it's certainly valuable to hear their contribution, and then also make improvements based on what they say, and then they'll be engaged in the process a lot more if we include them.
Okay, that's great. And I remember, Rob, that at Nistar we had a very good example of engagement. I remember that one of the team leaders of an improvement team, he was asked to present what he was doing to the CEO. Can you just tell us this?
Yeah, so there's certainly another aspect to the engagement, which is really around people's personal development and I guess what's in it for them. So the good example that Marco's referring to here is that we had a tradesman that we engaged to work on one of our continuous improvement projects. He'd probably been a tradesman for, I'm guessing, probably 30 years. And we asked him to basically run, facilitate, and lead a team of people to deliver a significant improvement to the business. To start with, he was really quite nervous presenting in front of his peers, which is something he'd never done before, and basically leading a whole new process that was brand new to him. So we coached him throughout that process. He was, as I said, was quite nervous at the start. He delivered some really, really great results. And in the end, we had our CEO of the global business come down for a visit. And we actually got him to present to the CEO about the project and the results out of that. And the feedback from the CEO was that was the best continuous improvement project he had seen and presentation. And I often reflect on that to think about, well, we had this tradesman that was, really nervous to present in front of, 2, 3, 4 people. And then he's gone right up to present to a CEO of a large organisation with really good feedback. So the development that he got out of that over that period of time was huge, and you certainly can't underestimate that.
Yeah, no, it's great. I think that's a very, very good example of how we can, involving everyone in the process, how we can have this kind of acknowledgement from the top, really from the CEO coming all the way from Switzerland to Tasmania, and then he presenting to the CEO, and it's a great outcome. Yeah. All right, so then we can move now to the third topic. We already touched on it again in the framework, but it's the follow-up routines. Mm-hmm. So for this one, Rob, I will come back the word to you, just to talk now about follow-up routines related to cost management. So in your opinion, what's the importance of a strong follow-up routine to manage costs, and how frequently should we be reviewing? Of course, depending on which area or which level of the organization we are, but what are your opinions about the routines and the frequency and so on? Sure.
So I guess with costs, they're certainly not going anywhere. So costs are always going to be something that we're going to look at. So in my opinion, it's always worth being proactive and setting up a good routine and structure so we can manage and maintain our costs. One of the important things that we need to do to make sure that we land budgets and continue to beat them is to actually measure our costs and monitor them. And so we need that routine so we can get into that rhythm of reviewing our costs and then having the opportunity to lock in any gains that we see. So if there are some benefits or cost savings, we've got that regular catch up that we can make sure we implement those as quick as possible. The routine as well provides the opportunity that if we identify trends are starting to head in the wrong direction, we've got a short amount of time that we can quickly correct those before they become a bigger issue. One of the important things about having a follow-up routine, as we do that measure and monitor of costs, it really increases the ownership and the accountability to those cost area owners to make sure that we deliver on our actions and deliver on our costs. Without that routine, it's quite easy for those for the performance of your costs to start drifting over time. As for the frequency, how frequently should you do it? That's basically going to vary depending on a number of variables, which I'll go through. The first thing we need to consider is we need it to be frequent enough that if we do have opportunities, we can lock them in really quickly. If we're only having cost reviews every quarter or so, we're certainly going to lose a lot of value in delaying those opportunities. We also, as I said before, want to be able to identify trends going in the wrong directions really quickly so we can take corrective actions. Things that need to be considered for how frequently you do your cost reviews would include the value. So if we've got cost areas that say spend $100 a month, we're probably not going to spend as much time on those as maybe another cost area that might spend $1 million a month. The other thing to look at is the reporting period as well. My recommendation is that you'd want to have cost management sessions during your review period. So if your reviews are every fortnight, you'd probably want to have a review session once or twice within that fortnight at a minimum. Another thing to consider is the information that you've got available as well. So to do your reviews, you need to have good quality information. If that information's not available, it doesn't necessarily mean that you can't do those reviews, but we might need to consider what other information is there. So you might not have cost information, but you might be able to get some other type of consumption information. So Marco, you talked about gloves. We might not see the cost of gloves in our system, but we might know, hey, we've used 10 boxes of gloves in the last week. And then from that, if you can manage that well, you know that your costs will come through well as well. The other thing to consider as well is what's the performance of the business been as well. So if we do have some areas that are quite variable between reporting periods, naturally they'll get more attention than those that seem to be reasonably stable and pretty close to their targets.
All right. Yeah, I think that follow-up routines is really a key factor for any kind of cost management. And as I said, it really depends on the frequency. Really depends on all these factors that you mentioned. And it's incredible when you see people that are not used to be in front of this kind of information when they started, and how amazed they are. Like, oh, that's what I'm consuming. That's the cost of what I'm doing. When you put also, even when we are talking about units, about consumption, when you put some dollars on it, okay, so your action of using these every day is costing to the company X dollars a week, something like that. It's amazing the reaction that they all have. So.
Yeah, and I think even putting that value to units. So once again, you talk about gloves. If we say to people, hey, do you know these gloves cost $10 per pair? That sets alarm bells off and say, okay, we didn't realize it was that expensive. So.
Yeah, and I remember, again, some examples. If you come back to gloves, some years ago when we were over there and we were checking the reasons why the consumption was high. And then some very, very simple actions that we could change. For example, like every time that they went to the toilet or they went to a break, they were just throwing the gloves in the bin. And as soon as we start realizing this kind of action, okay, why not to put something here that they can just hold the gloves when they're in the break, and then come back and take the same one. So are very, very simple actions that made a whole difference to the costs. So, yeah. How about you, Leandro? What are your thoughts about follow-up routines? Sorry.
Yeah. I learned very early in my career, coincidentally, from an Australian consultant. You can't measure something, you can't manage it. So not very different from what Rob said. And I mean, every company has its own set of reports, and AGA certainly has invested in standardizing some of them across different regions, pretty much Brazil and Australia as a significant portion of the international area, and automating our reports as well to make sure it makes it easier. So we even have a daily cost report available in BI dashboards straight from the ERP, which makes everything more simple. But I think that one very important thing in terms of the behavior that we have, I mean, in AGA Brazil, we're in the middle of the implementation of a culture management project with behaviors that we want to influence and behaviors that we want to avoid. And I could quote many of them because we have for each of the pillars 3 do's and 3 don'ts. But I'll stick to one that says we shouldn't. It's a don't. Don't give excuses and justification rather than solutions. And I think with that approach, you're probably going to move forward rather than keep explaining what you did before. And another thing is we talked a lot about cost management till now on the execution and the discipline of that execution. But it's also very important on the business planning portion of the business. So how can you secure that you're planning correctly? So we also move into a more extended and strengthened integrated planning process, which actually extends. Like we don't only do monthly outlooks for the current year, but also extend it for the business planning period of 2 years. And that also increases the confidence level of achieving those costs when you're doing next year's business plan cycle and when you're actually executing that future business plan 1-2 years from now.
Okay, that's great. Yes, it's all part of the same topic, but a slightly different way of each company it's dealing with it. How about you, Stacey? How is the follow-up routines at Tomago?
Yeah, I think much like Robert and Leandro, we certainly have follow-up routines, and I would agree with it. It's maintaining the discipline of the follow-up routine, and what I've seen in the past is in the bad times, you absolutely maintain the discipline of the follow-up routine with cost management, but as the business is going very well or the focus comes away from costs, that those routines can fall away. So for us here, we had a discussion about that, in that we have to maintain the discipline, and all it means is that if the monthly cost meeting is fast because costs are on track, then brilliant. But you must maintain that with, daily dashboard, and also just the no surprises approach. And this is what I would always say to the team. If you know of something mid-month, I want to know about it. I don't want to wait until the end of the month and have a surprise when operationally we knew we had a problem that could be in the region of, $1 million. Just if we're following those routines, then there will be no surprises. And I think it just builds great commercial acumen with our operational areas. When you've got operational superintendents focused on cost, they're embedding the routine. They're learning those commercial skills as well, that they, moving away from that technical area, and they're accountable. So the discipline of sticking to the routine is key, in my opinion.
Yeah. I think that's the big learning from the Japanese when they started talking about continuous improvement some decades ago. It's really the discipline. How can we make any kind of process of improvement that we want to establish? It's really having the discipline and not just a flavor of the month stuff that come, stay for some months, and that's it. So we really need to have the engagement and the leadership and so on. So probably this is a good link to the next topic when you talk about embedding the process. So when you talk about discipline and so on, I think that's probably one of the key words when we talk about embedding and making this cost management process sustainable in the business. So for this topic, maybe I will start talking about it. As a consulting business, of course, we usually, when we are called to do a project in our clients, we bring some new processes, new tools, and so on. And that's always something tricky. That's so what happens when we leave? So how is the company going to keep going with the process, keep going with the new tools and new process that we brought to the business when we leave? So really embedding the process is it's a key factor for us. So we just read the question: what should an organization do to guarantee the sustainability of this process, of this cost management? So in our opinion, as a consulting business, I think that the first one is really actually we have like three main factors that we always mention. It's leadership, the methodology or the process that we need to put in place, and the technical knowledge. So leadership, as Leandro said in the beginning of the webinar, it's really in our opinion, the key factor. It's really when we have the leadership engagement in any kind of cost management or improvement process. I think that's the number one. We usually see when we have changes in the leadership, like CEOs, new CEOs or new directors and so on, when they bring knowledge from the previous job, and then they want to change something and something that is actually working. So we see that this kind of behavior, when we don't have the full engagement of the leadership, that's one of the key things to make the process not really sustainable. The other one is the best possible process in place. So it's really, do we have the right tools? In many of our clients, we see that they have data. So they have plenty of data, they have a lot of reports, so they can see costs in a daily basis or weekly basis and so on. But usually it's just a report, a very lot of numbers and confusion and so on. So many cases we have the data, but we are not using properly the data to make actions and to take decisions. So do we have the right tools, the like user-friendly tools that really show us where is the problem, what we need to do and the problem, like dashboards and then action planning. So that's a key factor as well. So we can all manage the actions that everyone is doing. And then, of course, the technical knowledge. So the technical knowledge is really part of the who is executing the actions, the improvement actions. The other point as well is the ownership and accountability for the budget. We also see a lot that people think that budget and everything related to cost, it's something for the finance department or for the continuous improvement department. They should be accountable. They should be running this and so on. But that's not true. We all know that actually they should be accountable. Each area, each manager, they should be responsible for really creating budget, and after that executing and following up the budgets, the numbers, not the finance department. Finance department or the continuous improvement area should be just the support areas to enable them to deliver a good budget and a good follow-up. And yeah, in many cases, when we come, we set up a meeting to talk about costs, and then we see that the areas are more like, no, this if someone from finance is not here, I don't want to go to this meeting and so on. I said, no, but that's your meeting. That's a meeting for you to manage it, to help you manage your costs. We can be here in the room beside you, but business improvement and finance is a support area for you. We are something to support with any new tools or something to make it your life easier to manage your costs. I think that when we have this kind of processes and tools and training, of course, they need to be trained to follow it up. When we have these three factors in place, usually it's embedded. And that's what happened in most of our clients when we implement this kind of process. As soon as we leave, if these are strong, all these areas are strong, these factors, it's usually sustainable for longer when we leave. So Stacey, do you want to comment anything about it, about embedding the process at Tomago?
Yeah, sure, Marco. And a lot of what you've just spoken about rings true with me, and what we've experienced at Tomago is that moving from finance and continuous improvement own our projects, and then struggling to get that just sustainability in the business. And so we have moved away this year, and where we've seen it done really successfully at Tomago are departments where supervisors, or where that routine is that the project owner of a particular project is reporting to the operational manager, operational superintendent, with continuous improvement there as support, then that is where it starts to work, because the ownership of the project is there. And also systems and data. So an issue I think that's held us back in the past that we're working on is systems and data. We have multiple systems, we have so much data. Is it easy for people to use? No, it's absolutely not easy for them to use. And there is a lot of reliance on finance and continuous improvement to be the analysts and to build the reports. So I guess the change we've tried to make this year is, when we have an improvement initiative, take the time up front to set up automated reporting to allow then the project owner to be self-sufficient and not have to rely on constant help, I guess, to just get the information that they need. And we've seen that just change the way projects are managed and really shift from it's continuous improvement to no, it's person A, that's your project. And just one more thing that we tweaked this year is that as part of our monthly reporting routine, each department area had to report on we call them the T20 projects. They're our top 20 projects for the year to deliver our budget. Previously, we had reported on progress outside of any other meeting. The continuous improvement team would report on the progress of the projects. They would be nearly held accountable for why is this project not going well. Whereas now the operational areas have to sit there and talk to the project because it's their project. And it's part of, like reporting on cost, it's part of the monthly routine. And we've cascaded that up. So myself and our CEO actually report to the chairman of the board on the T20 projects. And people know that, so they understand the importance of just the ownership process, and that it really is led from the top, and we really do care about the results because it's going all the way to the top essentially. So I would say it's not perfect for us. We've struggled to get ownership in the departments, but in the last 12 to 18 months, I've really seen a shift, and it's nearly a bit of tough love in a way. Of no, this is your project. You need to own it. We will help you, but it's your project. So that's how we've seen a shift here at Tomago.
Okay.
And it's not easy, I would say.
Yeah, for sure. That's the trickiest part when we really the sustainability to have people engaged, and that come back to the other topics. Really have them engaged to the process and understand that they own it. That's the hardest part for sure. One thing that I see over there at Tomago, in some areas you have some champions, some guys that they are the multipliers of the concept. So that's a very valid point as well. When we have some key employees in each area that are really the ones that will multiply this process and to be the trainers, train the trainers or something like that, that they will support the areas with whatever they need. So having champions is also a very good point.
That's right. And Marco, just to touch on that further, so part of the process we've identified, let's say it's a real person, Louis, in our electrolysis department. He was in a maintenance role. He's a superstar when it comes to innovative thinking, managing projects, getting the buy-in of the guys on the floor. So we actually moved him out of his role and into what is now improvement role in that department. And we've also done that in our casting house as well. So it's finding the champion and then saying, you know what, I think we can utilize you in a different role to create a lot more value for our business.
All right. Yeah, great. That's great. How about you, Rob? What your thoughts about having people on board and the process really embedded into the business?
Yes, I think it's really important to have clear roles and responsibilities up front so people understand exactly what's expected of them and they can meet those expectations. So I've certainly seen similar things to what you're saying, Marco and Stacey, where other departments will rely on the finance or CI to lead these cost management or CI initiatives, and then you really lose that ownership from the departments. So one thing we're certainly working on is making sure that the cost owner is really taking ownership of that process, and similar to Stacey, that we'll have the finance or CI people there to help support through that. On the tool front, so obviously there is a lot of data out there, and there's a thousand different ways that you can cut that up and make it look nice. At the end of the day, I think it just needs to be a really simple tool that people can use. If it's simple and easy to understand, people are more likely to use it. While it's great to have some nice graphs off to the side, we just got to make sure that it is user-friendly and people can operate that by themselves. Mm-hmm. And the other important thing is really what I mentioned about in the follow-up routines is really to monitor it and measure how the costs are going and make that visible as well. So get that through into whether it's the daily meetings, the variance reports, month-end reports, and the likes, and that really just keeps it at the forefront of people's minds. They'll keep focusing on that and keep working on it. And yeah, the other probably aspect as well, which we haven't really touched on, is when we do start to get some of these improvements or changes that we identify, is to really lock those in as well. So if we do find there's a good saving on consumable X, we should capture that within budgets and forecasts going forward. And that way, all that good work that we've done, where we've identified the opportunity and implemented it, we'll continue to see that into the future as well.
Okay, yeah, no, that's a very valid point. It's really locking in every time that we have, that we found the opportunity. How about you, Leandro? How about AngloGold?
Well, it's difficult to be the last one, especially when we're almost 1 hour into this. There's not much left today, but it's certainly good when you can avoid some costs. And it's even better when you can find some reduction in the cycle that's repeatable. And so you have a saving for your life of mine. But I insist that there's a significant portion of the cost management that happens during the business planning cycle. And I'll bring this closer to me now. Like I said at the beginning, AngloGold in Brazil has mostly underground mines. So our mines just go deeper and deeper every year. And most of the costs with framing distances, the ventilation, refrigeration that we need to do, the shifts are the same size, so you spend more time traveling into the face, and that can only increase your costs. So the capital definition portion of the business and approving the right capital, making sure that you apply those investments to your business and then work on the discipline of that execution of the capital is also very key, and it's a big input from finance as well. So I think that's something that we didn't talk much during this discussion. And in AGA Brazil, the finance department has the accountability for the management routines, which we discussed, the investment evaluations, and also to give the pace of the continuous improvement project. So beating the drums so that everyone does it. So this makes us a key business partner for cost management, as one would expect from the finance team.
Okay, no, that's good. Yeah, again, it's I think that the key part, again, talking about us, about a consulting company that helps organizations to implement this kind of process. That's the tricky part, how to make it sustainable. How, when we leave the business, how can we make sure that the business will keep going and will really keep the nice processes and tools that were implemented. All right, guys, so it's 2 minutes to complete 1 hour. So it's that's the end of our event. I'm pretty sure that everyone watching got some very good insights about cost management. I think that we should all reflect and think, okay, during this hour, what is the key takeaway from the webinar? At least myself, when I see these presentations and webinars, I always try to think what's the key takeaway, or at least the 5 key takeaways that I would try to implement in my business, or I try to talk with the other managers and so on. So that's a big question. What should you do with this information, and how does this help you and your business to going forward? And of course, if you need any kind of support to implement what we have discussed here today, Aquila, we can assist you and your business. We have experienced consultants working in many countries around the world. So we would be happy to visit your company and just create a plan around cost management or revitalize the plan that you already have. So feel free to contact us. So thanks for our panelists for your valuable contributions. It's amazing to have you guys on board here with us. So thanks, Stacy.
No worries, a pleasure.
Yeah, thanks, Rob.
And thanks, Marco. Thanks for the invite.
Okay. And thanks, Leandro. I know it's almost 9 p.m. in Brazil. I'm so sorry to keep you at work at this time, but then you can now come back to your family. Thanks for being at this time with us.
So a short day at the office, you mean? Yeah.
Sorry?
Okay. So you mean it's a short day at the office? I can go home at 9.
Yeah, so sorry about that, but thanks for being here with us.
And thanks, Mark, and thanks, Stacey and Robert. I think we had a good discussion, and certainly we can still share even more than what we did today during this 1 hour.
All right. So we had some comments from the chat directly to us, to the panelists. We will, maybe we'll take just 1 minute here. So one of the questions was, in your business, cost management is always looking at the past. No, in our business, cost management is always looking at the past. We get a report weeks or months after the fact. How do you manage cost when the information is not immediately available? So this was one of the questions here. I'm sorry, it's already the end, but does anyone want to touch on it?
Mike, I think for me, we certainly face that issue as well. So one thing that I like to look at is to use other data to predict what your cost might end up being. So if you've got other ways to measure consumables or utilisation or what have you, that's a good indicator to how your cost might come out to be at the end of the month. It's certainly good to look in the rearview mirror and see how your costs were, but more importantly, what you can do differently going forward to get better results.
All right. Any other comments about it?
Well, similar. I mean, it's probably easier to manage your physicals. And as I said at the beginning, at the very lowest basic level, that's what you have a look at. Your cycles, your number of trips, whatever your business is. If you're doing less than you did before, you're probably not. Well, your fixed costs are going to be heavy on your final results.
Okay, that's great.
I would agree, and I would just say as well, we take that look forward always, even though you've got your historical information. How does that compare to what you're saying for the next month, the next quarter? And if you're already way off, then you know there's something that has to change. But I would agree, physicals for us are number one indicator of what the costs are going to come out like.
Okay, that's great. We have a couple of other questions, but probably we will answer offline as it's already over our time here. So thanks again to our panelists. Thank you very much for your time. And just after here, we will do the draw for 2 books for everyone that was for the whole session. And I will let you know through our channels from LinkedIn and so on. So see you next time, and thank you very much.